Perfect. And if anyone has any tech issues and they pop out, pop back in, I'll be keeping an eye on the waiting room and I'll let you into the room. At the same time, to be mindful of everyone's times, we will get started. So for today, it's myself, Mario Mota. I'm one of the partners and co-owners of the Steele Group alongside Cliff Steele and Mark Weasel. I work jointly here at the firm, managing a tremendous amount of assets now as it continues to grow. And throughout the year, we tend to do a variety of different calls on different topics. And given the inauguration today, we thought it would be topical to have a couple individuals join us. And one of the main key individuals is Jonathan Lowe. Jonathan basically has a background at AGF that's quite extensive. He's been basically working with their AGF global equity strategy, also their US strategy. And he's had, I have 12 years, I think he's well over 12 years now and growing of experience on the team. Goes across the country talking with various brokers and investors on their strategy, some of the policies coming out on the fund. And then shortly joining with us, we'll have Greg Valliere, which is a political strategist. He's been on a tremendous amount of news networks throughout his career, and he's worked quite closely with AGF over the years, providing political commentary and insight access. He's based out of Washington, D.C., and for those who were not aware, there was the inauguration today, so he was covering some of that event. So as soon as he's done with some of the current coverage he's providing, he's going to try to hop onto our call. But it won't stop us from starting, as Jonathan has been talking to a lot of people across Canada about the impact that we have the upcoming election on. It isn't a typical long format PowerPoint presentation. We've had calls before where we go through PowerPoint slides and details, but for those who attended the last call we had with Jonathan and Greg, it typically is more of a discussion. It's a Q&A, it's a conversation around kind of the topics, so it isn't like we have a structured script. There's a few questions clients sent in and a few topics we want to touch on. So we'll get started on that, and then along the way, as people have questions, feel free to kind of chime in, and we're happy to kind of fill that in on that side. So without further ado, maybe what I'll do is I'll start with just Jonathan giving me a little bit more background for all the guests here on his role at AGF and kind of some of his roles and duties at the company.
Sure. Thank you, Mario. It's a pleasure to be here. Thank you for wow, the big audience that we have on the line here. I see a big crowd. So my name is Jonathan. I've been at AGF for the last 13 years now, and I've been working closely with I've been working within our growth equities team for most of that time. For most of my last 12 years, you might have known me from being on, working very closely with Tony Genoa, who is our lead PM. Today, I'm working as part of the integrated team on the growth equities mandates that are carrying it forward with AGF Global Select, AGF American Growth, and the AGF US Small Mid Cap. So we are growth investors. What we look for are companies that have above average growth. We believe in the idea of market leadership, and that's because if you look at the markets over a long period of time, what you would find is that the bulk of the market's return is generated by very few stocks. And so those very few stocks, in our view, have some commonalities. The first is that they demonstrate innovation. They have new products and services coming out that are capturing market share. It's disrupting incumbents. That's leading to above average growth. And then there's the second factor involved, which actually also involves politics, which is today's topic. And that has to do with the macroeconomic environment. Policy change, macroeconomics change, that can result in one group of stocks taking leadership or having a period of above average growth over another. So we look very closely at those things, and when you look at our portfolio, you'll tend to find those attributes. It's constantly changing. We're constantly adjusting to the policies that are coming about and the ongoing politics of the day. So that's just a quick rundown of what we do at AGF, and we're thrilled to be on the call today to talk to high value clients like yourself.
Perfect. Awesome. So I guess right on that topic then, the portfolio itself has done well over the years. At the same time, based on what you said, for individuals who've known, let's say the AGF Global Select as an example, it is not a passive index fund, it is active. You look at obviously what's going on in the world and you adjust. And when you look at, let's say, the portfolio a year ago versus now, we have a new administration that's come in. So we had the election, and as we approached the election and the event finally happened and Donald Trump became the new upcoming president, was there any changes that happened from that point when we're looking at this time last year versus as we kind of head into the fall, into now the inauguration, that you're looking at the portfolio?
Yeah, absolutely. There's a lot of, I mean, the thing about market leadership is that it's always changing. And if you even go back further than a year, there's been a lot of change over the last several years, right? Did you know that in 2021 and 2022, as we were coming off the pandemic, the sector with the fastest growth in the index, it wasn't technology or AI or any of these things. It was energy, actually. Energy was the fastest growing sector because we were coming off the pandemic. People all of a sudden wanted to take their revenge travel. Energy, oil prices went from negative to, to much higher. And so these energy companies demonstrated a period of above average growth. So we were participating in that, right? Now that changed because as the Fed finished its rate hiking cycle and started to contemplate cutting rates, and eventually did cut rates, the leadership shifted in the market towards some of the technology stocks. And so that's where we were last year. We had the likes of NVIDIA in the portfolio. We had other plays on AI, and we did very well in that respect. The portfolio was up about 40% last year. Did extremely well, but leadership continues to change. Even with Trump in the office, or well, now he's in the office, but in the last couple months he's been coming into the office. Well, the markets are a forward-looking mechanism, so it's always adjusting to new information that's coming about. So I'll give you a few examples, right? So Trump gets elected in November, and one of the things he says is, I'm going to appoint this guy RFK as the health secretary. Well, there's some implications with that, because RFK is well documented to be skeptical of the drug approval process with things like vaccines, et cetera. And so that had very big implications for the healthcare sector. The healthcare sector actually was the second worst performing sector in the fourth quarter of this year. And the reason for that is because if you're a drug company, well, it's not looking so good anymore with RFK in as the health secretary, because the bar for drug approvals is all of a sudden much higher. So there was areas within healthcare that suffered. We had exposure to companies like, there was a company that we had called IQVIA. What IQVIA does is they're exposed to the clinical trial, clinical trials. So they have services that are meant for companies that are developing drugs, and that's attractive to the extent that you think drug discovery is going to accelerate in the future, which we thought, because we had things like AI, we had genomics going on. We thought the pace of drug discovery is looking pretty good, but all of a sudden that thesis is impaired if the bar for drug approvals is much higher. So we had to adjust and get out of that, right? So we were selling down some of the healthcare names. Now there are areas of healthcare that were still pretty good. Things like medical devices. So we own a company called Intuitive Surgical in the portfolio, which is a leader in robotic surgery. We think that the future for robotic surgery is going to be much larger than it is today. Only 4% of surgeries today are done robotically, and I think in the future can be much, much larger. So those companies have continued to do well, and so we just leaned into those areas. But I'm giving you an example of how policies can change. Another one, by the way, is the quote-unquote DOGE effort. Yeah. I think that's a great effort, by the way. I'm supportive of that. Who wouldn't want more government efficiency? And I think over the long term, the government has to get its spending in order, both in the U.S. and Canada. In the U.S., we've been adding about $1 trillion of debt every 6 months or so, and that's just unsustainable. And so to squeeze more efficiencies out of the government, that's a good thing. But that has strong implications for a company with government revenues, right? So if you are invested in any company whereby 10%, 25% of your revenues comes from the government, you want to avoid that. And so that led to sales, right, in the portfolio. We had like Booz Allen Hamilton in the portfolio. Booz Allen Hamilton is a consultant, but their largest client is the U.S. Department of Defense. And so we got out of that, right? We had a company called Jacobs in the portfolio. They do like infrastructure. They're an industrials company. So about 10% of their revenue comes from the government. So we had to exit that. So these things are always changing. Leadership is changing. We're trying to react to some of the changing policies, and there's going to be beneficiaries as well, right? So on the other side, Trump's putting a greater focus on domestic law enforcement. And so to the extent that you have companies playing into that, they've done well. We have in our U.S. growth portfolio, we have a company called Axon. they make taser guns, so non-lethal weapons, but also they have shoulder cams and a cloud-based platform for law enforcement. So to the extent that there's greater expenditures for domestic law enforcement, that's a company that's going to benefit. So these wind shifts, they result in risks as well as opportunities, and we're trying to adjust the portfolio accordingly.
Perfect. And it's another component, I guess, about Trump, because I know some people sometimes get nervous about him coming into office, but I do want to know, and I think you probably talk better on this, that it's not the first rodeo. Like, we have seen a Trump administration before. So maybe if you're to think back on your time, because you've been at AGF for some time with these portfolios, when he kind of looked at Trump getting into office the first time around, those first few months, versus this time around, do you feel like it's more of the same? Do you find some differences? Like, I think at first the market had a very hard time reading Trump in the first few months when he got into office on his first term. But maybe you could talk on that a little bit.
Sure. I think there are some things that are the same, some that are different. Greg, when he gets on this call, may or may not agree with me, but
Yeah.
I think that when first of all, what's the same? I think the saying goes that you should take Trump seriously, but not literally, and I think that's still the same. Like, to the extent that he says some stuff out and he just throws things out there, some of the times, he's actually sending a signal underneath the surface, and that's really the message, right? And sometimes we get caught up in the what he's saying, but we sort of miss the signal. For instance, when he said we're going to pull out of NATO, he didn't actually mean we're going to pull out of NATO. What he actually meant was like, Trudeau, you better start spending more on defense, right? So, and the Europeans. I think tariffs are a similar story. 25% tariffs, and we were just talking before this call, Mario. I think that's that's extremely unlikely to happen across the board on any Canadian goods, because that would severely hurt American consumers. I mean, even at 10% tariff on Chinese goods, which could very well happen, by the way. But just to give you a very real example of things on, for the people on the line, what company makes a lot of their products in China? Apple. A lot of their iPhones are made in China. And if you were to impose a 10% tariff on all those iPhones that are being made in China, Apple, one of two things will happen. Either Apple suffers a 250 basis point contraction on its gross margins, which it won't be received well by the market, or the more likely one is the second one. They just simply raise the cost of iPhones. They pass that on to consumers, and that is mostly what's going to happen for many goods, right? Like that tax in tariffs is going to get passed on to consumers, and so I think that tariffs are a way of scaring people, bring people to the table, but ultimately, Trump is trying to negotiate a better deal. Actually, there was a great story about John Bolton, who was in his cabinet in the first time around, and John Bolton was like, this guy who was he's kind of looks crazy. He's very willing to go to war, and the saying was like, nobody was actually listening to him, but just having him in the room scared the other side, and you ended up with a better deal at the end of the day. And I think that was pretty appropriate as to how Trump really operates. So I think that part is the same. Now, what's different about Trump this time around? I do think that he seems a little bit more tech forward, in terms of surrounding himself with people that have been in in business and in Silicon Valley. I think that he is going to be the first crypto-friendly president that we've ever had. He's embracing things like autonomous driving. He wants to set the ground rules for autonomous driving moving forward. So, I do think that he's learned a little bit from his first go around, and there are some interesting little different shades of gray from him this time around. The last thing I'd say is that I think that Trump has some very positive things for the market, but also some negative things for the market. We all worry about tariffs. We certainly, some of his bluster is unwelcome, I would say, when it comes to things like swallowing up Canada and Greenland. But the one thing that you could say about Trump is he is a president who cares very much about the stock market. He uses the stock market as a barometer, in fact, of his success. There's been a lot of times in the past where he's tweeted about how much the stock market's been up, since he's taken office. And I think that just today, you got another confirmation of that, right? I mean, he did a number of day one executive orders, but one of the things he didn't do on day one is slap on tariffs. And because if he did do that, the markets probably would not react well to that. So I mean, I think that there is that does help give some confidence that there is some rationality at play in the sense that he wants to make sure that the markets do well.
Perfect. And you kind of touched on some of the business owners, tech individuals, obviously Elon Musk being the one that's more prominent for people's minds and more of a well-known household name. But there's another name people might not know as well, but David Sachs is the individual he's appointed as the, I think the AI and crypto czar. The Americans seem to have this obsession with the term czar for various divisions in the US, which I've always found amusing. But on that side, you touched on crypto. You lightly were touching on AI. Obviously, AI was something that was an area of the portfolio and just in general the markets that was driving a good bit of growth. And regardless if it was Harris or Trump, seemed to be like an underlying theme that was going to continue. Do you feel under a more kind of pro-tech, what individuals from Silicon Valley, such as David Sachs, on this kind of committee, do you think it'll be a higher accelerant now at AI? Do you think it'll run a little bit less regulated, or any thoughts on that side?
Yeah, I mean, I was a big listener of Sachs' podcast before he was appointed. I don't know if you listen to the All In
Yeah,
podcast.
the all in, yeah.
He actually hasn't been on since he was appointed. That's
Yes,
interesting.
he's officially a government agent now.
He lost his besties all of a sudden.
Yeah,
But do I think that AI would be accelerating? No, actually, I think AI is accelerating no matter what. I mean, this is
yeah,
one of the things that's occurring outside of politics, um, and no matter who's president, they cannot stop the tidal wave that's coming when it comes to AI, spending around AI, the growth of clusters, the need for networking, the need for power. All of that is happening. Okay. And now where Sachs could probably play a role is certainly in terms of setting regulation around AI. Because just listening to him in the past, he is a proponent of, not stifling innovation through regulation. And so I do think that you're going to see continued innovation. Um, Now, when it comes to AI, we this is an area that's really accelerating by leaps and bounds. I think the first darling when it came to AI was obviously NVIDIA, right? It still is the 800-pound gorilla in the room. It's the bellwether when it comes to AI, because when you hear about the companies that are developing these language models like Microsoft with OpenAI, ChatGPT, some of you may have, to the extent that you have an Android phone and you have Google on your account. Maybe you noticed a Gemini app popping up recently or in your Google searches. I'd actually encourage you to try to use Gemini. It's actually a really good language model. But there's other ones out there. There's like Anthropic. There's one called Cloud. Meta has one called Llama 3.
yeah.
So there's all these companies building these language models. And the way they are building them is that they're training these models on NVIDIA GPUs. And so NVIDIA is still commanding the lion's share of the spending related to AI. Now, what happens is that they string together these clusters of these chips, these GPUs, and the number of the clusters, the size of those clusters is also growing. So, several months ago, the biggest clusters were about 35,000 GPUs. Elon Musk's xAI put together a 100,000 cluster GPU. It's going to be 200,000. Not that far into the future, and there's visibility going out to 1 million. So what that means is that there's two things going on. One is that you need more networking for all that, and so now there's other beneficiaries, right? Companies that are engaged in the networking and the advanced networking, that technology that's required to put these things together. They're going to benefit. Power, right? You need to power these things, and so we've done really well on nuclear energy related plays because nuclear is I think an ideal option if you are a hyperscaler looking to build data centers. Nuclear's got great footprint. It's got a huge, it's got very reliable power. It's not intermittent. And as a data center, you got to be on all the time. It's got access to cooling water, which you need. So nuclear is a nice fit. The problem with nuclear is that there's not enough capacity, and to build new capacity, it takes a very long time. So what the next stop, in our view, is natural gas. So we've been actually adding to our energy exposure, in part because we like natural gas. We think that natural gas is like the next stop because it's readily available. The technology is ubiquitous, and it's cheap, and it's relatively clean compared to some of the other fossil fuels. So I think that there's a lot of opportunities beyond NVIDIA chips that is really out there in the markets today, and we're trying to take advantage of them.
Perfect. And but yeah, on the nuclear side, which I find fascinating, I did see this series of announcements the past, call it 6 months, 8 months, where you saw Amazon setting up a deal with a private nuclear facility. You had the 3 Mile Island announcement from Microsoft, and there's always talks about the idea of Google acquiring something. So it seems like the game plan on that, and yes, really hard to build a new nuclear facility, but finding pre-existing facilities that are completely not obsolete but out of date and modernizing them so you can get the output. How fast do you think it will take to get these projects? Is it the same kind of idea that it'll still take many, many years, just like a new facility, or just retrofitting an existing facility? You think it's something that might be a solution in the near term?
Yeah, so in 3 Mile Island's case, they're restarting one of the last ones that it's not the one that melted down. It's another reactor that they had actually shut down, that they're restarting. So that one's quicker. Now you still need regulatory approval for that, but I think that's going to speed up, because there's broad recognition that nuclear is a nice fit for data centers and for the growth of AI. In fact, Biden, before he left office, had signed into law, something that supports the growth of nuclear energy moving forward. So I think that the timelines will speed up, but it's still a long time, to build a new facility from scratch. They're talking about SMRs now, which are small modular reactors. There's a few smaller cap stocks that are plays on that we have not participated in, but have done very, very well. And I think that in the future, that'll become part of the equation as well. So, to the extent that you believe that nuclear is going to be a bigger part of the solution, you can participate by, owning, for instance, Cameco, which we have in the portfolio. That's world's largest uranium producer. We think if you're going to have more nuclear power, you're going to need more uranium. So there's different ways of playing it, but we do think that power is actually the bottleneck now. It's not access to chips; it's access to power, and that's why you're seeing these hyperscale companies going out signing these massive deals for a very long time. It just signals their willingness to spend on this stuff.
Yeah. Now, looping back on the natural gas side, I know there's a lot of rhetoric from Trump about us being the 51st state. Again, like you said at the beginning, it's usually, you talk quite loudly and you're clearly trying to get something, but it does seem like the whole goal of his rhetoric, as I look out my window, I don't see any Apache helicopters coming over to invade Canada. It seems like it's mostly the idea of getting Canada to open up more on their natural resources. When you're looking at natural gas, are you looking more US players, or do you think there's opportunity in Canada in that space? You think something might change on that end?
There is opportunity in Canada, but so with natural gas, there's two drivers. I only mentioned one so far. So the one so far is really the growth and demand from AI, but the second one is the building of LNG facilities to export natural gas externally. So traditionally, natural gas was sort of a landlocked resource. We had a lot of it in North America. There's actually a lot of it in the U.S., but it couldn't go anywhere. And so the LNG facilities in Texas, they would export some, but Europe had gas coming from Russia, so it was fine. They didn't really need it. But that's changing. So Europe no longer gets its gas from Russia, and there's a lot more LNG capacity coming online in the U.S. And so if you're a natural gas producer in the U.S., all of a sudden you have this outlet of greater demand moving forward. And so I think that's going to be very positive for some of the gas producers in the U.S. Here in Canada, we're still pretty slow in building our own LNG facilities, and that's one reason that, I think we should be much faster in building it, because that'll enable the Canadian producers to benefit from the same dynamic in terms of exporting natural gas overseas.
Yeah, you had seen a rather rapid, amazing build out in the U.S. in terms of how quickly not the U.S., sorry, I mean in Germany, when you're talking about the Russia situation, and how quickly they set up a terminal to be able to receive natural gas. I know there's Canada.
Well, I mean, the bottleneck isn't receiving; it's actually in the liquefaction part. So when you're exporting it to liquefy it, that's the hard part. And once
Yeah.
once you do that and you ship it elsewhere, it's not hard to receive it. So I think that's one fundamental change that's happening with the U.S. Natural gas industry.
That's mostly like as they kind of remove barriers, regulation, they're able to kind of basically get it liquefied a lot sooner. Is that the idea?
Yeah, well, or they're going to look for a lot more of it.
Yeah.
So, I mean, because they're going to be able to handle, greater exports. So, I think there's going to be a step change in demand for U.S. natural gas, and we added one of the largest players to the global select portfolio recently.
Cool. One other question on the portfolio wise, and it kind of segues to Canada a little bit and the US and globally, but Canada has been struggling for quite some time, and you kind of see that reflecting on our dollar as the dollar continues to get devalued a little bit lower. And there's various factors. One of the biggest ones is it seems like the US is doing quite well as an economy to the point where it looks like we might not see as many rate cuts as people were anticipating in the States, while Canada was pushing for greater rate cuts, which does impact currency. And there's other factors that hit currencies, but when you do see such a large gap growing between the U.S. and Canada for their currency over the last year, how do you, like, I know that you don't make specific bets on currency, but how much does currency play a factor when you're designing the portfolio?
Um, I would say that rarely does currency actually result in a portfolio decision. I know that the currency has been going down. Now we do have the ability to hedge in the portfolio, but we haven't. And the lower currency in Canada has actually benefited our investors because we are invested in the U.S., elsewhere around the world. Now, do I see it bottoming here? Well, I'm not a currency expert, but I do think that for good reason, the U.S. has been pricing out the number of rate cuts that was in the market because the economy has been very resilient. Part of that is like a lot of the innovative areas of the market in the U.S. have continued to hold up. The Magnificent Seven stocks are all U.S. companies. They're delivering phenomenal earnings growth, and here in Canada, we're just much more sensitive to rate hikes. We have 5-year mortgages instead of 30-year mortgages. We have much higher debt. And we have a much more expensive housing sector. Many of us carry much larger mortgages, and those even if you have a fixed rate mortgage, every 5 years it gets renewed at whatever the prevailing rate's going to be. So, I think that structurally in Canada, we just have a much more sensitive economy to higher rates, and as a result of that, we need to cut rates in order to stimulate the economy because a lot of people are feeling it much more here. Whereas in the U.S., if you had a 30-year mortgage that you signed back in 2017, you don't really care if rates are going up or down. It's not really preventing you from doing anything else. You're just not moving. That's all. So I'm not surprised to see the divergence in rate policy, and that when you have a divergence like that, you are going to see the exchange rate reflect that. So we've seen the Canadian dollar now fall below 70 cents. I think that's actually quite a big move already. So to the extent that you see some stabilization in rate cut expectations in the U.S., and you have, because the inflation print recently was pretty good, and to the extent that here in Canada, you see a little bit of improvement, then I think the exchange rate sort of stabilizes here from here on out. Generally, if you look at the history of the Canada-U.S. Exchange rate, it's typically traded in a range. It always overshoots on the upside and downside. But I would say that there is a fundamental good reason to have a lower dollar here for Canada, and that's because when you look at productivity in Canada, we've actually lost quite a bit of ground compared to the U.S. in the last 10 years.
Hey, Greg, how's it going? I felt bad as Greg has been trying for the last while.
Yeah.
In and out of the call several times. You gotta love technology at times.
I've had better afternoons. I'm not quite sure what happened, but can I do a quick summary or take some questions?
Yeah, of course, Greg. Of course. We just spent a bunch of time covering on the portfolio. Just a quick recap. Greg's out in Washington, so I'm not sure how your Festivus has been today. I know it's always a huge time for anyone on the political side, regardless of party elected. It's obviously a big event. But yeah, we were looking forward to maybe getting your synopsis on the day's event and maybe kind of the build out to the Trump getting elected and some of your viewpoints on it. Let me see if I can try to, bear with me one moment, if I can find your name. Do you want me to share your camera by chance, Greg, or you want to keep it no camera?
Can you see me?
I will push a button and I think we'll see your beautiful face soon enough.
Start my video.
There you go. Nice to see you. There's a
Okay.
friendly face. Awesome. Take it
All
away,
right.
Greg.
Let's go. Well, thank you, and hi, Jonathan. Happy New Year, guys. So I obviously watched the inaugural address by Trump. Some very interesting things. He did not talk about monetary and fiscal policy, to my shock. I thought he would. He's in trouble already on the tax bill. He does not have the votes in the House. As you may know, the House Speaker Johnson only has 2 votes, and he doesn't have enough to get a tax bill done. And maybe that's why Trump didn't talk about it. Trump didn't talk about sentencing of people who were arrested on January 6th. He's still going to have to deal with that. I think that it was well delivered, and it was not the Donald Trump that I'm used to hearing, the bombastic, very bellicose guy. It was a little bit softer. He still said some crazy things. He wants to rename the Gulf of Mexico to the Gulf of America. He didn't talk about Canada. He did talk a lot and very angrily about the Panama Canal. He wants the Panama Canal. He made no doubt about it. Didn't get into much else on geopolitics, but I'd say the big issue that he's going to have to deal with in the next week or two is fiscal. They don't have a budget deal, and one has to come by March 14th, and they don't have anything close to a tax bill, and that's going to have to come as well. So that's a quick overview. I'm sure you have some questions.
Yeah. Well, last time we had a pretty big shutdown at one point during Trump's administration with the government. Do you think, given that it's so early into his term, that he might gamble with shutting down the government to see if he gets his wishes on the budget, or do you think he might just try to get something, give some concessions to get a budget approved before there's a government shutdown again?
I think there's a growing chance there will be a shutdown. The Speaker of the House got everybody off the hook right before Christmas, but he made it clear he wasn't going to do this again. So this date of the 14th of March, I think, will be a very contentious one. And we've got, in addition to having only 2 votes in the House, there are several very conservative House Republicans who won't vote for anything. So things are going to get very, very contentious. And I think that this is going to push everything back. And I'd say my bottom line is that for investors who were hoping for something quick, some stimulus for the economy, it's going to come later rather than sooner. I don't see a tax bill coming until summer or even into the fall. And I think that is not in the market right now. He also, by the way, I know all my Canadian friends are interested in energy. He's still very aggressive about drilling, getting more pipelines, more permits. Even though I've been making the point, and my friend Kevin McCready and I both are saying that there's a risk of a glut. I think with all of the energy that could come onto the market with the Trump proposals, we may have too much oil rather than too little.
And so that's an interesting concern. Um, and do you kind of foresee that there's a chance of, let's say, going on the geopolitical side, because he did talk a big story about ending the Russia-Ukraine deal. Do you think that
Yeah,
the risk that if that ends, that Russia is allowed once again on the global stage with energy? I know they're right now backdooring it to China and other countries,
yeah.
but that could that also be an added risk on energy, or do you think they'll still maintain the heavy sanctions on Russia?
I think there's still sanctions to come. Let's get through this miserable, terrible cold winter. Maybe by March or April, the climate will change literally and figuratively, and we could get something. But I don't think it's imminent. I think I mean, Trump needs a victory, and I think he's got a victory in Gaza, even though it's shaky in my opinion. He got a victory there, and he's going to issue things over the next few hours in here in Washington all sorts of regulatory reform where he will undo some of the Biden regulations. He'd just kill them and he'd come up with his own regulations. That's virtually certain.
Um, We touched a little bit before you tuned on Doge. We talked a little bit about RFK. Would you mind just maybe just for the individuals on the call talking a bit about the actual process? We've been seeing a lot of the nominees or individuals Trump wanted around him in his administration. It doesn't just start today. It looks like it's been going on for quite some time, where they've been doing hearings, things of sort. Does it seem like the core of the Trump team will get nominated? Or is there anyone you think? I know there's the Gates individual that happened earlier on, and that seems to be past them at this point. But does it seem like
Good
out
question.
that risk?
That's a good question. I would say there are at least two more uh, potential candidates who are in trouble. The first is Robert F. Kennedy Jr. There was a story out in the New York Times yesterday that he tried to block COVID vaccine. He wanted to kill the COVID, which is crazy. And there are many other vaccines that he has tried to kill. So I'd say Robert F. Kennedy Jr. is still on thin ice. And the other one is Tulsi Gabbard, a foreign policy advisor. She has been very, very friendly with the Assad family in Syria. I'd say the Assad family is not somebody you want to be real friendly with. He's now in Russia, of course. So I think her record of cozying up to dictators and fascists and real bullies, she's on thin ice as well. But I think that's it. So that's not a bad track record. If Trump gets all the other nominations through and only loses two, that's it. But I'd say Kennedy and Gabbard are in trouble.
Yeah. And normally it's like, regardless if it was Trump or Biden or any other, is it normal just to have a few not make it through the process? Is that common, or I'm assuming?
Yeah, it's normal. We've already had one, of course, Gates, this
Yeah.
playboy drug addict from Florida who had to drop out. Even Republicans said we can't handle this, and that's true with the Republicans and Kennedy, and it's true with Republicans in particular with Gabbard. A lot of Republicans feel her track record disqualifies her.
No, that's understandable. So then, going on to the Doge side, how much power do you think that department's truly going to have? Is it mainly just going to be recommendations for Trump for things he should consider and pass down to his team? Or how active do you think Doge is going to be in this administration?
And I missed the first word. Going on to the what?
Sorry, the Doge, how much power is it
Oh,
actually going to
right.
have?
Yeah.
Yeah, yeah.
Yeah. I think it's just a matter of time before before Elon Musk runs out of his luck. I think a lot of people already at the White House feel he's a pain in the butt. He barges into meetings. He's very outspoken. It's all about him. So I think he's in trouble. And of course, his cohort, Ramaswamy
Yeah.
announced today that he is going to run for the Senate in Ohio. So if it's just going to be primarily Elon Musk, I think that Musk will realize, here's the bottom line, Musk will realize that you can't cut $2 trillion. It can't be done. You would have to have mammoth cuts on Social Security, Medicare, and not to mention just ordinary spending. Maybe they could cut by a little under a trillion. But the idea of $2 trillion, which is what Musk is talking about, has absolutely no chance at all.
Do you think there's some low-hanging fruit they'll go after that's kind of more prominent that people might be familiar with, or?
Yeah, yeah, that's a good way of putting it. I think there is some low-hanging fruit. Trump, of course, argues that new tariffs will bring in lots of revenues. Economists will argue on that, but Trump is adamant that he will raise tariffs and that the tariffs will help reduce the deficit.
So on that note, with tariffs, obviously China's always the more topical one and kind of the easy one Trump's gone after. But there was a lot of rhetoric about Canada. There's so far nothing on the docket that has happened.
Yeah.
Last time we had you on, on last April, and you made a comment that at the time it looked like Trump was in contention for the presidency, and he did win. But if Trump had happened to have won and Trudeau was still in office, that it might spell some trouble for Canada. Do you still think that's the case with it looking more and more that the Liberal Party is going to be gone in Canada, or do you think you might wait until the next election, or how quickly you think you might move on Canada?
Here's how I would put it. I would say that Panama is in trouble. There's going to be hard negotiations with Panama. I would say that Greenland is willing to talk. And I think, frankly, to be blunt, Greenland can be bought. I, I think China is going to get much higher tariffs. And then there's Canada. And I think it's extremely unlikely that Canada can be pressured into any kind of uh, tariffs. I think that even though Trudeau is politically very weak, as you know, I think that that there's no way in the world the U.S. is going to pressure Canada into any kind of concessions. I think that's virtually out of the question. But again, I do think Panama, Greenland are countries that could be persuaded to negotiate.
And I guess we broke down each one. Any concerns on either the Panama, I guess, from a conflict standpoint, you think they're just going to use flex their military muscle and say, we're not doing anything else? With Greenland, it seems more monetary, the option there, or at least
Yeah.
convincing the small population.
Yeah, I mean, it's possible that Denmark, which, as you know, of course, owns Greenland, could be bought. Maybe Greenland could be bought off. Maybe, and Greenland is such a small country with, a few $100 billion could buy off the entire island, which is coveted at the White House for its precious metals, for its shipping lanes. I mean, there are strategic reasons to covet Greenland, and I don't rule out these negotiations continuing. I think with Panama, it's just a matter of paying more money. Or paying less money to go through the canal. I think that is doable. But I feel very strongly that Canada is untouchable.
That's good news. That's very good news. I think a lot of people would like to hear that because there was I guess, a lot of saber rattling from that side that got people a bit nervous. Um,
Yep.
I did have a question from an individual. There's a chat function that people can submit questions, and I just want to be mindful of time, so I just want to get this out there. Basically, this is more a bit of Trump's policy kind of coming out, and if there's any view on inflation, inflationary pressures, both Canada and the U.S. But basically, that there might be more conversations about dealing with inflation again instead of lowering rates, maybe raising rates.
Yep.
Basically, in light of the kind of big spending, market influence that you're going to kind of push from the administration, which obviously is good. We want to see markets grow, we want to see the economy grow, but like sugar, too much of it can be a bad thing. Um,
Yep.
how serious is that of a concern, either Greg or Jonathan? And I will, yeah, 1 second.
Well, if I can make a quick comment on
Yep.
that, I'd say there's going to be a real problem with a lack of labor. A lack of labor is inflationary. You're going to need thousands and thousands of workers in Southern California. It's going to take 2, 3 years at least to rebuild that entire part of the country. And I talk to people at the Fed. They're not convinced that inflation has been defeated. And I think that it's going to be something that you've got to watch really carefully. Uh, I'll leave it at that, but I still think inflation is something to worry about.
Yeah, I would concur with Greg. Right now we're trying to have our cake and eat it too, basically. It's if you have a strong economy and you have an economy that's growing resiliently above average, then you also at the same time usually have to worry about inflationary pressures. So the economy right now has been kind of in Goldilocks zone. We have like just about 3% real GDP growth in the US. We got 4% unemployment. So actually unemployment's been moving up a little bit, but it's just been normalizing back into a range where it was before the pandemic. At the same time, inflation is at about 2.5%. So that's good. I mean, those are Goldilocks conditions if you could freeze it there, but that's not how the economy works, right? It doesn't freeze. I think that inflation is definitely something to watch. I think there's upside risk to inflation as we head into this year, and that's why the market's been pricing out a lot of the rate cuts that had been priced into the market. That said, the data that we've had so far shows that the disinflationary trend kind of still remains intact. Like we're still having inflation come down, and some of the slower moving parts of inflation, like shelter costs, have been moving down. Goods have been deflation for some time. Services have been moving in the right direction. So right now the data still looks good, but it's definitely something that I think the Fed is watching very closely as we head into 25.
Yep.
The one comment you did make was on basically unemployment, because unemployment and employment does play a big factor in inflation. the idea of I guess, cleaning up the border and mass deportations, obviously illegal immigrants aren't officially registered tax-paying individuals, but they're still part of the labor force to an extent in the US. Is there concerns that if they get very aggressive on that front, that it could destabilize the employment market, maybe drive the unemployment rate down if it starts forcing companies to seek out, let's say, legal options on the employment side?
I guess I'd say that the real question right now is, was that last unemployment report a fluke, or was it something we really have to worry about? It might have had some noise in it, but again, I have friends in Southern California, and I think that we're looking at 2, 3 years, maybe more, to rebuild Southern California, and I think that will put tremendous pressure on the labor market there.
Is there, I guess, going on to California, since you brought it up, is there concerns that the government might impede the rebuilding of it? What I mean by that is they're talking about
Yep,
price controls and wage controls and saying you can't
yep,
charge for labor. And there's not enough electricians or tradespersons to actually do even a fraction of the work needed in California at the moment because of the level of damage. So the
yep,
reality is they're going to have to convince electricians, plumbers, builders from across the country to migrate to California to build. But the
hmm
local government is saying that you're not going to be allowed to pay premiums for their labor. So usually the way you attract people is to say, well, you're living in Florida, I'll give you 20,000, 30,000 extra to
yep.
uproot and come work here. Do you think the government in LA and California will maybe change their approach, just loosen up some of these restrictions they're talking about introducing?
Trump was surprisingly conciliatory on that subject in
Okay.
his speech today. He indicated the government would be helping California. He didn't say, as the House Speaker has said, that there's got to be all sorts of conditions met before they get any money. Trump didn't say that. So I think he realizes that California is too crucial for the overall economy to ignore.
Yeah. And do you think, I guess, going back on the inflation side, if you did get everyone working nicely together, let's say Trump does play a very friendly hand to California, it's a good public relation in that sense, and they do open up the purse strings, do you think that'll be inflationary because all of a sudden you have a high demand for lumber, materials, work in that sense? Is there a concern that California alone can move that figure?
Even before the fires, things were tight in California. Lumber, appliances, things like that. Again, I have a lot of friends in Southern California, and they were complaining a month ago that it still is really hard to get labor. So now that we've seen this fire, I think it's going to make the problem more acute.
Okay. Interesting. So it's I guess one other if anyone has any questions, again, feel free to submit on the chat. Again, try and be mindful of everyone's time. But on the currency, to loop back to that side, Canada is not in the same shape as the US in terms of low unemployment. Canada tends to have a lot higher unemployment at the moment, it seems like, on the US side. Are there concerns that if you do see inflationary pressures that Canada can keep up and raise rates again, Jonathan? Or is there worries that the reason why the currency is down is that we might see Canada further decouple from the US on that front?
Um, yeah, I think with Canada, I mean, the U.S. has the issue of such a resilient economy that's been growing at around 3%. It's driven. I think that, by the way, we're going to see continued productivity gains in the U.S. because of things like AI. Well, Canada has kind of the opposite problem in the sense that when you look at our GDP per capita, now we've avoided a recession mostly because we've had population growth. But if you look at GDP per capita and adjust for the population growth that we have had, we had negative growth for like 6 quarters in a row. It hasn't been a good time in Canada. So I think that we're actually, on balance, much further from inflation than the U.S. would be. Now that could be affected by external factors like tariffs. So that remains to be seen. But I think like when you look at the economy on its own, Canada's quite a bit weaker than the U.S. and I think that's why we can afford to cut rates, whereas the U.S. is rethinking its posture in cutting rates.
And one question from Mark here in the chat, which was pretty good in that sense. I guess that could also give Trump pause on tariffs, is given the need for resources for reconstruction, especially the idea of lumber and softwood lumber historically tends to be the longest lasting issue in every administration. do you think that might deter Trump from adding tariffs, given the impact that BC lumber does bring to the US market and supplying them with the rebuilding supplies?
I would argue, and Jonathan, feel free to disagree with me on this one, but uh, I would say that tariffs are a done deal. I mean, Trump is adamant about tariffs. Canada, 25%. You'll be lucky to keep it at 25%. And same goes with some other countries. So no, I think that he is determined, and he indicated again today in his speech, he's convinced this is going to raise a ton of revenue. I have my doubts, but he is not going to he's not going to budge.
Interesting. So there's a question here on insurance. Yeah, no, I think in general, more of a comment, but we've had a lot of events also here in Canada, the construction costs from hurricanes and that have happened. Obviously, in the US, there's two major events. So
Yeah.
it's costing, it's one of these kind of mixed bags where you hear these horrific losses. Obviously, the human life one's the more tragic one, but it's a damage to the economy, obviously. But there's this other boomerang effect where now the spending happens to rebuild places of Florida and California. So that alone, do you think it could fuel a very good economy for the US when you have partly government aid, you have insurance payouts? I don't want to call it stimulus because people lost their homes and they're not being made fully whole in some cases, but the fact is people are getting some money, whether it's small or large, and they will need to spend it. So overall, does the medium term look a little bit more optimistic from, I guess, US consumers? They'll have to spend to buy goods and services. It'll create jobs in that sense.
Yep. Hey, one other thing, if I could have 30 seconds,
Yeah, of course.
that is, I am apprehensive about a feud between Donald Trump and the chairman of the Fed, Powell. They've feuded in the past. Trump is counting on rate cuts from the Fed, and as we all know, the chances of rate cuts anytime soon have diminished a lot. And I think if that happens, if there's no rate cuts for the next 2, 3, 4 months, Trump will become extremely angry at the Fed. I think that's something the markets may have to worry about as we get into the spring.
The I could be wrong. Trump doesn't have the ability to push Powell out, though, or do you just think he'll exert extreme pressure to get him to resign?
The latter to me is not out of the question. Powell's term doesn't end until 2006, but I think that if the president of the United States calls you up, you're the chairman of the Fed, and the president says, "I don't like your policies. I really want somebody different. I'd like you to leave." You're probably going to leave. I know Powell has said he wouldn't, but if the president puts heat on you to leave, I think that is a game changer.
Okay. No, fair enough. And then one more clarity on the tariff side. I know you brought it up a bit, but you did mention Trump loves tariffs, very likely with China. There's obviously the talks with Panama and other countries, but then Canada may not face as heavy brunt of tariffs. But you still think it's on the cards that we may get tariffs, or just Canada alone between the U.S.? Do you think it's maybe not as aggressive off the gate, but that eventually we will see something?
Oh yeah, I mean, I think you're going to get 25%. You know,
Also, you think okay?
Trump is a very skillful negotiator, and I can't totally rule out that, he cuts it down to 15 or 20%. But everything I've heard here in Washington is that 25% is quite likely.
There was talks that one of the, part of the joking in the 51st state was one of the key things you really wanted was just access to resources. If we had a more pro-resource, pro-energy administration come in, or even if, let's say, the current government decides to say we're going to open up the taps, do you think that could be a mitigating factor? Do you think there's anything that could appease that demand for tariffs?
I think Canada would have to comply with a lot of demands, starting with Canada's contribution to NATO. This has always been a, a bug up Trump's butt. Trump has always said Canada isn't paying its fair share. So that would be number one. Then they'd look at uh, components of electric vehicles. They'd look at immigration leaving the U.S. going into Canada, and this could perhaps stall the new talks on the new NAFTA. But I'd say the main thorn in the relationship is the contribution to NATO.
Awesome. Okay, so it'll be quite interesting. It'll be nice to kind of see, hopefully, some resolution on that front. Is it fair to assume Trump is likely gonna, well, he'll probably move ahead regardless, with
Mhm.
whatever policy he wants, but do you think it'll make any difference if there is a change of administration, or it kind of doesn't matter who's in charge of Canada? If we see a shift to Trudeau's party getting out and a more pro-Trump approach coming in, do you think that could help mitigate it, or?
That's a really good question. Your former central bank chairman, forgot what's his name.
uh,
Mark
Carney?
Carney.
Yeah, right. I mean, he's very well regarded in Washington in both parties. He's considered first rate. So, maybe if Carney wins, this could change the negotiating stance. But I still think there's going to be 25%.
Okay, fascinating. Any final thoughts from either Greg or Jonathan before I kind of let you go by chance?
Well,
Uh, Jonathan, I'm sorry I had technical problems. Thank you for bailing me out at the beginning of the call. I appreciate it. But yeah, it's going to be an interesting stretch. But my bottom line is that it's going to be a choppy 3 or 4 months on taxes, budget, all that stuff. I think by the time we get to summer and going into the fall, the climate could be quite a bit better. But it's going to be choppy for the next few weeks or months.
yeah, my final thought is kind of in line with that, in that, we're now in the third year of a bull market. We've had a great first 2 years. I mean, the cumulative return in 23 and 24 on the S&P 500 was 53%. And that was one of the better ones, first 2 years that we've had in history. Now, what usually happens in year three is that you get more muted returns. So, I would just caution expectations that we get a third year of bombastic results like we have in the last 2 years. I think what's more likely is that you get more tempered results. You get some volatility along the way, as Greg mentioned. 5% corrections, they happen on average 3.5 times per year historically in the markets. Last year, we got two of them. So we're sort of overdue for one, quite frankly, Mario. I wouldn't be surprised you get one, but when that happens, don't be alarmed. Stay invested. I think that ultimately you are going to end the year with a positive return, and you will see that this bull market continues moving ahead because bull markets don't tend to stop after 2 years. So stay invested and expect some volatility along the way.
That's perfect. Now, I want to thank the two of you. You guys kind of speak to kind of a principle most financial planners have, which is the idea that you want to stay invested. You don't want to be trying to short-term timing. Typically, people have not fared well when they try to cash out of the market, cash back in, and try to predict the future in a very short-term basis. And that long-term, based on what we talked about, whether it be the energy development, AI, things of sort, there's a lot of optimistic things to look forward to. But if people do have questions, obviously, as a recap, the call is mostly educational. We're not telling you to buy or sell anything in particular. It was of the educational nature. We're going to have it on our website available. You can reach out to Cliff, Mark, or myself at any point, or anyone of our team. We're happy to assist. Once again, thank you so much for everyone that attended. It was a great number of people that did attend. People had submitted some questions beforehand, which I was able to get out throughout the call, and I appreciate for all that feedback that came in. And again, thank you again, Jonathan. Thank you again, Greg. I hope everyone has a wonderful day. Hopefully, I don't know how the weather is out in Washington, but I hear it's just as cold and quite frigid as it is here up in Canada. So hopefully everyone stays warm and we'll have warmer days ahead of us.
So long. Thank you.
Thank you so much, Mario. Thanks, Greg.
Thanks. See you, Jonathan.
Take care.
Bye. So long.